Forex analytical forecast for New Zealand dollar US dollar, Australian dollar US dollar, gold and crude oil. New Zealand dollar US dollar, the instrument shows sideways movement. Resistance and support levels for the pair New Zealand dollar US dollar you can see now on the chart. The currency pair New Zealand dollar US dollar is showing a downward trend as bears are trying to consolidate their advantage gained since last Friday, March 31st. The asset reached the level of 0.6220, continuing its decline amid the published weak macroeconomic data from China and a number of incentives of technical nature. Thus, business activity on the index of manufacturing sector in the Celestial Empire, from Caixin decreased to 50 points in March from 51.6 points with the estimate of 51.7 points. The manufacturing business activity, released by the National Bureau of Statistics on March 31st, showed a decline to 51.9 points from a previous reading of 52.6 points, though it had beaten experts' expectations of a decline to 51.5 points. Business activity in the service sector for March increased to 58.2 points from 56.3 points. Australian dollar US dollar, Australian construction sector is improving. Resistance and support levels for the pair Australian dollar US dollar, you can see now on the chart. The Australian dollar US dollar currency pair is strengthening during the APAC trading session, reaching 0.6666 due to macroeconomic data. Retail sales declined but managed to beat the experts' forecast of 0.2% to the expected 0.1%. The construction sector recovered vigorously, with private sector residential construction approvals for February up 11.3% from a previous decline of 13.8%, investors down 0.5% from January's -0.3%, and mortgage approvals improving to -1.2% from a previous -2%. Overall construction approvals added 4% to last month's 27.1% decline, signaling the market that industry indicators are picking up toward a recovery trend. Gold analysis. Resistance and support levels for gold you can see now on the chart. According to the information from the trading floors, the price of the precious metal is trading in a steady decline, being under the influence of the downward signal formed last Friday, March 31st. The stock remains in the area of 1950, being under the influence of technical factors. Meanwhile, economists agree on the further steps of the key financial authorities of the world to continue the interest rate correction by regions, though with softer rhetoric, but against the background of the banking crisis in the USA, the Federal Reserve acts more accurately than the European Central Bank, the Reserve Bank of Australia and the Reserve Bank of New Zealand. The latter two agencies announced their regular meetings for the current week, which may result in an increase of 0.25%. However, expectations for the actions of the Australian regulator are rather ambiguous, therefore it is not necessary to rule out a wait-and-see attitude from the regulator. The financial authorities of European region, taking into account high level of consumer prices, most likely will continue to moderately adjust the cost of borrowing. Last Friday the statistics showed the core inflation for March strengthened by 1.2% against the previous 0.8% growth when analysts expected 0.6%, and the annual value showed an upward trend to 5.7% from 5.6%. But overall inflation was down to 6.9% from 8.5%, beating market forecasts of a 7.1% decline. Crude oil market analysis. Resistance and support levels for crude oil you can see now on the chart. During the Asian trading the price of the benchmark Brent crude oil shows a downward trend, being in the area of 83.99, but the announcement of the OPEC Plus countries' plans to reduce oil production caused volatility at the opening of the session. Thus, the day before Russia and Saudi Arabia announced the plans to cut the crude oil production, exceeding the current quotas, which would lower the May figure by 1.1 million barrels per day by the end of the year. The negative dynamics in oil supply on the trade floors is due to closure of a pipeline in Iraq with daily capacity of about 400,000 barrels to the Turkish port of Ceyhan. Moreover, political disagreements served as a trigger for an additional -75,000 barrels per day cut in Iraqi exports. Thank you for paying attention to our analytics on financial markets. We do it for you.